On today's episode of the Cryptoverse, we have, as I mentioned in previous videos, not only hit the $220 billion resistance point for the overall market cap, we have now bounced off it to the downside. So we'll take a look at that and a bunch of other market roundup elements as well. A cybersecurity firm has started rating cryptocurrency exchanges based on their level of safety. I thought you might be interested in that. Poloniex have decided to allow their customers to begin trading Bitcoin Cash, the split, even though those coins don't exist yet. I'll explain that to you. Venezuela has set a new weekly record for their peer-to-peer Bitcoin trading volume. I'm not surprised, and that's not the first time that's happened either. And there are some chickens that need feeding if you can spare just 50 cents of Bitcoin Cash. That's a little bit of a joke. Find out at the end. Timestamps for all of that are down in the video description if you wish to skip ahead. And if you're new around here and you want to get rid of the ads, support the show, and earn cryptocurrency rewards, please visit the website, thecryptoverse.show. Click on that big blue button in the top right corner that says Get Paid to Watch, and then there's a 2-minute explainer video that explains how you can support the show, get rid of the ads, and earn cryptocurrency rewards. So go ahead and do that. I'd appreciate it. For now though, we're going to get into the content. The first story is the market cap has not only stalled at $220 billion resistance point, it's now bounced right off. So this is the chart I've shown in the last few videos. It's total market cap for the Cryptoverse over the last 3 months. And earlier on in the week, we were just hitting this resistance point of 220 billion. We were hitting it, and now we have done a decisive pullback to the tune of about $4 billion. If I zoom into like the 1 month view, you can see we've pulled back from 220 billion to about 216. So that's 4 billion, and we've shaved that in like the last 24 hours. Now, by my time zone, Dash was the only survivor in the top 20 there. I mean, Tether doesn't count because it's a stablecoin, but Dash is up 2.3%. Everything else is down in the top 20, apart from Dash. Just an interesting observation. One coin that has established itself a bit of an uptrend over the last month is Wax, which I also spoke about in a recent video, having launched their network and started doing several million transactions per day. So this is what the Wax chart looks like. This is the Bitfinex chart of Wax trading against the dollar, and today it's on a bit of a tear. It's almost busting out the top of its channel here, but this is way back from 15th of October, and we're almost 15th of November now, so that was why I say it's a 1 month rally here in an uptrend. Now granted, Wax has less than like 1 million per day in volume, but it's now nicely above the 80-day EMA, which is kind of significant. There aren't that many coins, it's sort of in the top 50 that are above their 80 EMA. Now, at over 6,600, Wax has the highest activity valuation index, which is market cap relative to that actual network usage. So basically, Wax has a market cap of $95 million, but it averages 4.6 million transactions per day. So if you divide one by the other, this is an indicator of fundamental usage. So using AVI for short, if we use AVI as an indicator of adoption, Wax is undervalued compared to almost all other blockchains. So EOS, by comparison, has an AVI of just 125. Right? Remember I said Wax, AVI was 6,600. So it has a disproportionately large amount of transactions compared to a relatively small market cap. And EOS, so Wax is over 6,600 by that measure. EOS is just 125. So EOS does a similar number of transactions per day compared to Wax, but EOS has a much higher market cap. So you would expect it to have a order of magnitude larger transaction size, but at the moment it doesn't. So Wax is disproportionately being used versus its market cap. That's why I say it's undervalued. Now Bitcoin, let's go to Bitcoin now, because it's still respecting its 80-day exponential moving average. So like we said yesterday, for the last 2 months, Bitcoin has been respecting this red line, which is my 80-day EMA. Resistance all the way down, resistance yesterday, and a bounce off and a slight pullback from that, which is kind of what I would expect to see. So this is the behavior of Bitcoin. It's its character, as I would call it. We used to call it share character, but Bitcoin's not a share, but I'll call it share character anyway. This is a characteristic of Bitcoin's price action over the last 2 months. So what I'm going to be looking for For Bitcoin to get my attention, I want to see a daily close above the 80 EMA. Now we can also ask short sellers what they think about Bitcoin's outlook by heading over to the Bitcoin short positions. We need a broader view of this because if we ask the Bitcoin short sellers what they think, well, they think Bitcoin's price is going to rise based on this price action. We can infer that by the significant drop in short positions over the last several days. They're actually at a 2-month low now. We've broken the previous low. So the last time Bitcoin shorts were this low was here on the 5th of August. So quite a while ago. So that's the overview of the overall Cryptoverse for today. On to the next story. A Moscow-based cybersecurity firm has developed a ranking system to grade cryptocurrency exchanges based on their level of safety. And why would they do this? Right? Well, this was first reported by Bitcoin.com. Here it is. Security experts rank exchanges by safety and Malta dominates trading volume. I'm not going to talk about that second half of the article on trading volume. I'm just going to focus on these rankings. So the real purpose of this cybersecurity firm doing these rankings is it's basically a service for insurance companies. Insurance companies want to be able to figure out how much to charge a cryptocurrency exchange if that exchange decides to take out an insurance policy on the crypto that's deposited there. So you have to assess risk. That's what this cybersecurity company is doing. So the insurance companies will look at these ratings and then decide what the risk level is for the insurance policy in question. Now it does say here, when testing these exchanges, the cybersecurity firm doesn't just attack the technology. It doesn't try to break into the actual exchange itself, but it says here they also attempt several social engineering attacks, basically to trick exchange staff members, which is what a real attacker would do. So you can't leave that untested. That would be a gross oversight. So cybersecurity doesn't mean just security of the physical technology. It also means processes, procedures, the competency of your staff and so on, because the easiest way normally is through the front door. If you can get a user to unlock the door, you can just breeze straight through, which is hundreds of times easier than busting the actual technology infrastructure in many cases. Now, you know me, I want the primary source whenever I can get it. So I went to the company's website. I think I found the report, but you can't just download it. You have to request a copy of it. So this is what I found. It's on the group-ib.com website. They have this 2008 cryptocurrency exchanges report, but like if you hit this request button, it pops up with a form that says what's your name, your company, your position, and your email address. Yes, I did fill that out during the research for today's episode, but I'm now waiting for a reply from them. So if you want to kind of jump the gun and get a copy of it yourself, just go ahead, fill that form in. Maybe they'll send you a copy. For now, we'll just have to rely on Bitcoin.com as the reporting source. So they've reported the best and the worst exchanges. So I'll give you the summary of this. The lowest safety exchanges were OKX, Huobi Pro, however you pronounce that, and Coincheck. They kind of ranked at the bottom. The safest exchange came out as Kraken, with Coinbase Pro and Bittrex following just behind that. Surprisingly, Binance, if you're interested, was kind of in the middle of all those. That's all for that. On to the next story. Poloniex have decided to allow users to trade the Bitcoin Cash split even before it happens. So check this out. This was reported by the Coindesk. Coindesk rather. Crypto exchange Poloniex announces a pre-fork trading of Bitcoin Cash. Now I've mentioned in previous videos that Bitcoin Cash is facing the potential of a network split in its upcoming hard fork on the 15th of November. And this would be a split into Bitcoin Cash ABC and Bitcoin Cash SV, Satoshi's vision. And this is going to happen on the 15th of November unless the community can resolve its disagreement before that. At the moment, it's kind of looking unlikely, but don't quote me on that. Right. With just 7 days to go, though, Poloniex have decided to create 2 new markets on their exchange. So one will be where Bitcoin Cash ABC trades against the Circle dollar, the USDC, and then another market where Bitcoin Cash SV will trade against the Circle dollar, the USDC. Now, just to be clear, again, neither of these Bitcoin Cash variants exist yet, which means trading them is highly, highly speculative. They may have absolutely no value at all, right? Poloniex themselves are not taking any risk though. Think about it. Because they make money on fees. They just basically make money on trading volume. They don't make money based on the actual value of the crypto asset. The traders care what value the crypto asset is because you care whether it's higher than when you bought it, right? But the exchange doesn't care. All they care is that it's moving backwards and forwards because that's where they take their fee. So the reason I say this is highly speculative is because say if you take 1,000 Circle dollars and you buy Bitcoin Cash SV, which are actually IOUs on Poloniex, there is a possibility that the Bitcoin Cash community resolves its disputes over the next 7 days, comes to consensus, the network doesn't split on the 15th of November, and that Bitcoin Cash SV coin never comes into existence, ends up being worth nothing, you lose all your money. So the same goes for Bitcoin ABC, right? Even if the network does split, we also have no idea what their relative values will be. So if it doesn't split, you could potentially lose all your money because the coin doesn't come into existence. Even if it does split and you speculate on one of them, we have no idea what the eventual price will be of either of those coins. Bottom line, I personally do not recommend trading either of these assets ahead of the split. That's just me. Do with it what you will. On to the next story. Venezuela has set another personal record, let's call it, for peer-to-peer Bitcoin trading by volume on localbitcoins.com. So coin.dance is the website where we get this data from. And no matter which way you slice it, it's true. If you measure it in BTC, it's about, 1,076 Bitcoins in a 7-day period. Even if you switch it to Bolivars, it's like 1.6 billion in a 7-day period. Now, despite the Venezuelan government continuing to encourage, let's say, the use of the petro, in some cases downright insisting on its usage, a whole bunch of citizens just prefer to trade Bitcoin. And I'm not surprised because it's far more predictable, Bitcoin, than the petro. On to the next story. Just a bit of fun to end the show today. I have to ask you if you like chickens. Not chicken, chickens. If you do like chickens, then you might want to feed some. So here's what I mean by this. If you head over to the Twitch account of this fellow, I think it's a fellow, RedPepper261, what you will find is a 24/7 live stream showing the inside of his chicken coop, and then on the right hand side, a dispenser which activates when 50 cents or a minimum of 50 cents of Bitcoin Cash is sent to the address that you see in the banner above. Now, according to one Reddit user, approximately $500 of Bitcoin Cash has been pledged to this in just over a week. And actually, they proved that by providing a link to the block explorer showing this address and the funds coming in. Now that is what I call a real world use case for the blockchain. I know that was terrible. But that's all I've got for you today. If you like this episode, go ahead, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback. And you know I'd very much appreciate it if you would hit that subscribe button. Also, make sure you check out my online store. My online store has a bunch of products on there bearing the Cryptoverse branding. I appreciate that because your purchase from the online store will help to keep this channel going. Other than that, I will be back with the next episode of the Cryptoverse. So until then, here's me, Chris Coney, saying bye for now.